What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is October 27th of 2020. Well, folks, I hope you are having a fantastic day wherever you are. And in today's video, I want to spend some time to talk about the supposed correlation that a lot of people have brought up between equities or stocks and cryptocurrencies like Bitcoin. And I want to talk a little bit today about why I not only disagree with that idea that there's a direct correlation with the two, but along with that as well, talk about how I truly believe that if there is any correlation or similarity in price, how we're going to start seeing a dichotomy or a break off of that supposed correlation. All right, so we're going to go ahead and dive straight into the charts, guys, and talk about it. So first off, I want to go ahead and talk a little bit about why I personally don't believe in this case that there's much of a correlation. Now, for me personally, I have very high standards when I go towards the statement of saying that these markets are directly correlated. I look for, at a minimum, a year's worth of consistency in price action. I, in many cases, like the desire to see 2 to 3 or 4 years where these asset classes have basically moved in tandem together. And if we get that, then in that case, I'll usually stand on its statement. However, the reason why is because I don't focus on short-term time frames in this case. Usually when I'm investing in certain asset classes or I'm more bullish on one asset than the other, or I'm focusing on these macro trends, I tend to kind of isolate myself to a few asset classes that really stand out in order to see those kind of multiples and returns, like we've focused on with cryptocurrencies such as Bitcoin. But I want to go ahead and talk a little bit about why I think there's been similarities and why people have built that assumption. And the reason why is because all assets have been doing really good over the last couple of months since back in March. Obviously, there's been a huge kind of change in the way that asset classes have responded to the kind of pricing of those assets due to the fact that central banks have been printing mass amounts of money. People have obviously been looking not only for hedges like Bitcoin or Ethereum or Litecoin, but also as well, they've been looking at traditional assets that they're familiar with, such as stocks, properties, bonds, you name it. They've been positioning themselves anywhere where they can hedge against the depreciation of the dollar. Now, I digress. I rambled on a bit there just to provide that clarity. And again, you may stand to disagree. That's completely fine, guys. This is a community of different ideas. But I want to go ahead and talk about, no matter where you stand here as to whether or not there is a correlation, whether there isn't, I hope you'll stay tuned because I want to talk a little bit about how I think we're starting to see a break off of any similarity in price action for both crypto and stocks. Okay? So Bitcoin, as you all know, over the last week had a really great set of performance. Not only a 13.29% rally here for the weekly, one of the best weeks we've had for Bitcoin in a very long period of time. But along with that, this came in and setting in one of the highest closes on a weekly candle that we've seen since all the way back here in mid-January. A historic moment, something we haven't seen in over 2.5 years for Bitcoin. And for me, this is the biggest bull signal that we've seen in the market. There's a lot of things, of course, that we're calling for the bottom or awesome opportunities to get into the market. But this is the clearest signal that's going to carry us all the way up to 20K because now there really isn't many major points of resistance. We have set a higher weekly close than back here in June, here in August of 2020, and just to clarify, June of 2019, in January of 2018. This is really, really exciting stuff. However, we are not seeing this kind of similar kind of activity here for equity markets. So there's two reasons for this. One, crypto is not at the peak of a bull cycle or at all-time highs. It's still got room to get back up to those all-time highs, and along with that as well, set up most likely, as we saw with the NASDAQ breaking its previous all-time highs from 2000 and 2015, going on for higher levels. We usually have room to run after we retest to the all-time highs. So Bitcoin's in a very different position here, just to be fair to the NASDAQ and the broader stock market. But along with this as well, it's a much smaller asset class. And when markets are all peaking at all-time highs at multi-trillion-dollar valuations, people are going to be looking for these kind of drops in the bucket, these small markets. And that's what we've basically been seeing here. The number of Bitcoin whales in the cryptocurrency space have continued to expand. Taking a look here at actual data metrics, we can see on-chain, verifiably in this case, that there have been an increasing amount of people, right, around 1,500 to 1,600 down here at the lows here in January 2019, who were owning over 1,000 Bitcoin in their address, and now that has gone up to nearly just a little bit below 2,000, around 1,900 to 1,950, and it's well on its pace to continue climbing. And this is the highest level that we've seen since back here in 2016. And it looks like, as I mentioned before, that we're probably going to climb over that level. Just looking at the trend here, not trying to fight the data, it's showcasing to us that the trend is growing here. People are stockpiling Bitcoin. And this is not only the companies, the grayscales of the world who are building exchange-traded notes. It's not just the MicroStrategies or the Squares of the world, but it's also just investors, hedge funds, personal investors, different types of individuals who are buying and stacking large amounts of Bitcoin. Now, this trend here is obviously showcasing here with the increase of people owning a large stake of Bitcoin that the supply is starting to dry up on the market. And with the halving coming in, obviously back a couple of months ago, this has set a dichotomy here where we're going to start to see price move higher as demand picks up and supply dries. But if we take a look at equity markets, price action is telling us a very different story. And I'm not going to have to do any crazy complex technical analysis. You guys know I like to keep it simple and focus on price. Take a look here at the either weekly or 2-week charts. I'll go ahead and actually just try to keep it consistent. Jump over here to the weekly chart. Take a look at Apple here. Big tech play, went up to around a $2 trillion. We're still hanging around a $2 trillion valuation here for Apple. Let me ask you all something. Do you believe, if you're an investor, for example, investing in Bitcoin, if you consider that in the next year, right, Bitcoin right now is around $13,400, do you believe in the next year that there's a chance that Bitcoin could double? Yeah, I think that there's a chance. Absolutely. In the next year and a half, yeah, I think absolutely there's a chance that Bitcoin could double. Take a look at Apple here, right? So Apple right now is at a $2 trillion market cap. If you're stepping in as a new investor like you would be with Bitcoin at $13,400, you have to basically, in order to get a 100% return, see Apple go from a $2 trillion market cap to $4 trillion. Could it happen? Absolutely. We've talked about it before. It could be that the market goes that crazy and that parabolic, and there's enough liquidity from central banks to push it to $4 trillion. It could happen. But what is easier? Right? Is it easier for Bitcoin, which is around a $220 to $240 billion asset, to double, in this case, to 440 or 480 billion? Or is it more likely in this case that Apple, which is a $2 trillion company, would have to climb all the way up to $4 trillion? If we consider markets to scale, cryptocurrencies, and particularly in this case, Bitcoin or Ethereum doubling, is much more likely. Now, I'm not saying that fund managers are going to realize this overnight and all go into Bitcoin. That's not going to be a likely scenario whatsoever. And it's just also not properly, it's not proper portfolio risk management for an average investor, right? Especially if they don't understand Bitcoin. What I'm saying here is that as someone like yourself who's in the know, who's keeping up with cryptocurrencies, who understands what they are, or at least might be looking into cryptocurrencies for the first time, Apple itself does not provide a very good thesis for investment. It's not systematically, it's just not in the same position that Bitcoin is in as an asset. There is no asset right now that isn't trending at all-time highs as an asset. Bitcoin is the only asset class alongside cryptocurrencies as a whole, are the only asset class here that aren't trailing towards their previous all-time highs back in December of 2017, generally speaking. There might be a few cryptocurrencies that are outliers that have maybe launched recently, but not many that were back here in 2017. It's a very, very few rare cases. Now let's go ahead and take a look at a few other tech stocks here, right? And analyze Apple as well. Lower highs here in price, right? Multiple red weeks here in the sense price, whereas we were on a great continuous trend here where if you were betting up against Apple, you probably were getting liquidated on your shorts, your puts were being rendered worthless, and now we're starting to see more red weeks than green. Again, analyzing price, not using crazy indicators. Let's take a look at Amazon. More red weeks than usual. We had a general continuous trend here. Amazon, when it went up to its peak, you're getting very, very close to that $2 trillion valuation. Let's ask the question here. Does the chart here over the last few months look better than where it did back over the last few months, right? To me, it looks like it's starting to top out a bit, right? We're starting to top out towards that near $2 trillion valuation. And then we can go back to that original question, Bitcoin or Amazon here? What chart looks better to you? Something that's building up to the momentum of its previous all-time highs, or in this case, again, a stock here that is teetering towards a $2 trillion valuation, one of the big tech giants that's benefited greatly from the environment we've been living in as people have been doing online orders, obviously, but that momentum has started to fade off as things are returning back to normal. Again, you have to determine for yourself, guys. I'm not going to tell you what to buy or what not to buy. But this trend is not just in Amazon or Apple. It's across the board in the major tech giants. Take a look here at Netflix. Multiple tops, a triple top here. One of the greatest signs of a reversal and trend, and it's on the weekly chart. Multiple red weeks here. We're flatlining towards this range of support here. And if we break below here, there really isn't a major support range until down towards $400, which was previous resistance in the past multiple times and also could provide us support as we've seen it here in May of 2020. Again, let's take a look at Microsoft here. Microsoft, who had a great set of weeks here, really over the last few years, Microsoft has just kind of killed it here. Turn off the drawings, just focusing on here, this parabolic line here. We can take it to the logarithmic chart if you guys want to do that. All right, we can see here the trend has been phenomenal. Microsoft, again, like Apple, going up towards near around that $2 trillion valuation, sitting around 1.6 to 1.7 trillion. Take a look at this chart here, right? Setting in lower highs, not really keeping that momentum that we had beforehand, starting to flatline through a lot of the summer here, going through June to where we are now. Right, we're taking a look at the 2 week too, so I'll go back here. Sorry, some of the charts were on the 2 week, but take a look here, right? A very clear, significant lower high in the market. No serious trend. Take a look at Facebook here. Facebook probably looks better than most of them out there, right? And we're taking, again, a look at the 2 week. We can jump over to the weekly. Still setting in a lower high here. And overall, again, I would say that this is probably one of the outliers alongside maybe Google that is still holding relatively well up against its all-time highs. And that's because it's a lot cheaper than most of the tech companies, in my opinion. Again, considering markets of scale, if I'm an investor right now, and I think, Facebook and Google and a lot of the tech giants who have very similar levels of profitability, if I'm looking at Facebook, which is less than $1 trillion company, then I might favor that against other ones, right? Tesla. Let's take a look at Tesla here on the weekly. Multiple lower highs here, starting to, again, kind of shut off against the momentum that it's been holding for a long period of time. Just look at the chart here, right? Building up vertically, had its second vertical leap. If you take a look at the logarithmic chart, it had one of these back in 2013. And now momentum is starting to stagnate. And why might that be? Well, it's because Tesla is sitting around and has been for a while going around a $400 to $500 billion valuation. Is Tesla ready for that valuation? Again, I can't tell you guys that. But do you guys believe in the next year, as we're talking about Bitcoin possibly doubling, what's more likely to happen? Bitcoin doubling or Tesla going towards around a $800 billion market cap? Love Tesla as a company. Love many of these companies. But again, thinking from an investor thesis, putting aside our personal biases. Take a look at Google here, right? Google setting in a lower relative high, right? Pretty significantly lower than the top of the wicks here. But even just taking in the open of this downward candle and the close here around 1643, setting in a significant low here. Again, waiting to see here if we'll be able to find any range of support and kick up higher in price. But there's also plays like Shopify. This one to me is very similar to what we're seeing in Netflix and a lot of the other kind of emerging tech plays here. Completely sideways price action throughout the summer, continuous levels of resistance here, and again, at a well above $100 billion market cap. You see this in Shopify, you're seeing in a lot of other major tech stocks out there that were kind of some of the emerging plays that again have gone vertical either since their IPOs back in the mid-2010s, but along with that as well, since we've had central bank liquidity circulating into the market. That momentum finally dying off as central bank liquidity has stopped. We haven't seen a major spike in the last few months. Now, the ultimate thing here that really matters, again, if you guys just want me to cut out the bias here, what we should be seeing here, if we want to go ahead and kind of analyze, how crypto and stocks may be correlated, we'd want to see in this case a similarity. We'd actually want to see a ratio of these two. Would they be relatively similar, maybe kind of waving in and out? But that's really not the case here. Crypto has been outpacing equities in this case. If we want to take a look at the S&P 500, we can see here that it's been setting ever since back here in December 2019 higher relative lows and higher relative highs. So we've started to change on that trend here. This is taking a look at Bitcoin divided by the S&P 500. We can also do it to the NASDAQ, which is going to have a slightly less confident move. So we can take IXIC, which is the NASDAQ composite, go ahead and click enter here. And we can see here still setting in slightly higher relative highs and higher relative lows, challenging the trend here. Again, In this case, speaking to the short-term correlation, I would say in this case, this is why people over the last year have said, oh, Nick, Bitcoin is very similar to how equity is performing very similar to how equities are performing. And in that case, yeah, if you're looking at this time frame, it's pretty similar for the most part. I'd say it's a pretty decent correlation. But overall, we've seen historically speaking, that Bitcoin is far from correlated to equities. And more than anything, it just happens to be that it's moving this way because we have Bitcoin, which is warming up for the next cycle. It's not in the full cycle yet. And the NASDAQ, which is an established market in a full swing bull market. That's what's tending to happen here. And again, with central bank liquidity forcing money into the system, all equities are broadly going to, and all assets, broadly speaking, are going to go up, just like how they went down when we had a liquidity crisis in March, when equities were selling off, when properties were selling off, when bonds and so many other types of assets, again, people were fleeing these for cash. It's the same exact thing. So, anyways, want to take a look here. One other metric here that might be important, taking a look at the total market cap of cryptocurrencies, including altcoins against equities. Again, similar trend here. We're starting to set in our highest weekly close since back here in May for total market cap against equities, in this case, the S&P 500. We can also, again, for transparency's sake, take a look at IXIC or the NASDAQ, hit enter here. We can see here again, not as high as the tech stocks, but still the highest level we've set since back here in July of 2019, getting very, very close here. And this is, again, why I'm positioned in altcoins. Altcoins are relatively cheap right now, still in the market. Right? There's still a lot of room for dominance gain going into the next cycle. And that's what I'm caring about, guys. I'm here for the next, 2 to 3 years, however long this cycle takes. Our target range is November of 2022, a little bit longer than most people out there. And we have a price target of anywhere between 100 to 200K. So we're going to see what happens. I think it's a very, very exciting period of time. And above all, guys, I'm happy that you're here with me during this time because Bitcoin's still continuing to climb. And it looks very much like in the next couple of days here, coming to the close of the month, going into November, we could very well see 14K if this momentum keeps up. There's been a very few periods of time where we've seen this kind of price action in Bitcoin, where for multiple days we continue to set slightly higher levels over the week. And the momentum kicks in after that. So I'm very, very excited to be here with you all. I appreciate you all having the patience to listen to me ramble today. But overall, this chart's starting to scream, in this case, a bit of opportunity. So again, I'm positioning crypto well, more than any other asset class, and I'm interested to hear where you guys are positioned. If you like this video, drop a like, leave a comment down below. Tell me what you're thinking down below, guys. I want to get a conversation going. It means more to me than anything. And along with that as well, if you haven't already, consider subscribing and hitting the bell icon. So above all, everyone, thank you all so much for watching. I hope you're all having a fantastic day wherever you are, and I'll see you all in the next one. Take care, everyone.